We now move into our second session, exploring the core theme of this year's summit. The topic, Reimagining the Future of Insurance. This session will be moderated by Ms. Hasina Jusuf from the IIS 2025 Committee. And joining us as the speaker, Mr. Steven Lam, Senior Analyst, Asia Insurance, Bloomberg Intelligence.
Okay, good morning, everybody. Let me actually open this second session. Good morning, ladies and gentlemen. Welcome to Indonesia Insurance Summit 2025, Reimagining the Future of Insurance, Innovations for Sustainable Future. I'm Hasina Jusuf, will be your moderator for this session. We'll start our second session about reimagining the future of insurance and will be delivered by our speaker, Mr. Steven Lam. He's a senior analyst, Asia Insurance, Bloomberg Intelligence, and he has been in the finance industry for 20 years with a focus in research covering insurance companies, banks, and macro topics. Prior to joining Bloomberg, Steven held roles at Merrill Lynch, Cave, Bruyette, and Woods, and Religare Capital Market. But please add some more if this is not enough. I'm sure that you have many, many experience. Now, let us actually start the session. It has been actually stated previously by Pak Mirza, Pak Ogi, Pak Julius. Insurance actually has a very big role in economics. But we also understand that insurance industry now is facing a very crucial crossroad where driven by rapid technological advancement, evolving customer expectations, and an increasing complex risk landscape. As we look to the future, we are challenged to go beyond traditional models. The question is now, no longer how we do improve what we have, but actually now the question is how do we reinvent what insurance can be? And this is not actually just a conversation about trends, but this is about transformation. It has actually been reiterated over and over again. But it actually requires bold thinking, a collaborative spirit, and a shared vision of what is possible. So I hope that in this session we will learn more on what is going on in the world, the trend, and the data analytical, particularly in Asia. And Mr. Lam is going to actually share that with us as our basis to do transformation. We'll remind the audience again that at the end of the presentation, we will open Q&A session from the floor directly, or you may also come to slido.com, scan the QR code as shown on the screen later on, and after that, we can have a fruitful discussion, I hope. Ladies and gentlemen, please welcome Mr. Steven Lam. The stage is yours.
Selamat pagi. Selamat pagi. Selamat pagi.
Pagi.
Thank you, Hasina, for the great introduction. My name is Steven Lam. I'm from Bloomberg Intelligence. Hope you're all really enjoying the event today. This is very impressive. Thank you for the organizers, Indonesia Insurance Council, AHAI, for the great invitation. and also all the regulators in the House, industry participants, thank you so much for giving me the time to share a little bit of my thoughts with you on the insurance industry. So maybe I think it's worth to give a little bit of introduction of who I am. So I've been with Bloomberg Intelligence for the last 11 years as an insurance analyst. And before that, like Hasina said, I was also in the finance industry. Now, one of the interesting things is that you may find in my resume that I have not worked in an insurance company for even one day in my life. So why am I here? Why am I here telling you about the insurance industry? What can this guy offer for you, right? So, well, hopefully you guys will find out. Now, the closest thing that I can come with the insurance industry, at least, okay, I'm a very proud holder of 10 policies for me. I got 4 critical illness, 2 long-term power products, 1 whole life, a couple of group insurance, some car, and some auto. Now, suffice to say, insurance is definitely extremely important to the society. So we really thank you for the work, the hard work that you guys have done for the industry.
Well, we should give ourselves applause, I guess.
You should, yeah, give yourself a round of applause. Thank you. So, okay. Thank you for that. Now, so this is the reason why I'm here. Now, when I got the call from AAJI, right? Stephen, would you like to speak at Indonesia for this? This is my first reaction. I mean, are you kidding me, right? It's a very tough job. It's a very tough job. You know, standing up here talking about 45 minutes about insurance industry, educating the insurance experts in the house. Not an easy job, right? And then, you know, I went through a phase of, you know, freaking out, composing myself, and then talking to AAJI. They comfort me, so now here I am, right? Actually, I don't even have a nice iPad. I only have a few cue cards with me, so let me just make sure that, you know, I'm on track, you know, and with time, right? Now, this is today's agenda, okay? So we're gonna talk about what needs to be reimagined for life insurance industry, and then we have a little AI survey to share with you that we pulled together companies around the world from Bloomberg Intelligence, and then we're gonna talk about the P&C insurance, and then we'll give some conclusion in the end. So, now, being an insurance company is very tough. It's very tough. I mean, think about this. I got this chart helped by AI. This is what a typical actuary has to do at least. 8 various things. Very, very not easy, not easy. And actually, if I'm not mistaken, I checked the stats. There's only less than 100,000 actuaries in the world. And guess what? We have almost 1 million chartered accountants, 200,000 CFAs. I'm proud to say I'm at least one of them. I'm part of the CFA Society. But what I'm trying to say is, it's not the most glamorous job on the planet. Yet the impact that you guys have is immense. It's really immense, right? Okay. Next one, insurance agents, right? First thing that I learned when I studied the industry, insurance is sold, not bought. Not bought. Very tough. And then thinking about the underwriting, I think this is the picture of Lloyd's of London. I mean, you need to navigate a lot of different changes, right, in the P&C industry. So, going back to the point of insurance that is sold, not bought. I mean, I wish we were selling iPhones and all these fancy things, you know, Lady Gaga concerts and all that. These are easy sell. Insurance is not easy sell. Now, I'm going to quickly jump into what is the first point I'm trying to make. If I were going to show you this chart 6 months ago, I would look a lot smarter. I know there's a lot of investment professionals in the industry, and if I were going to test you what the green line represents, I think some of you might be able to figure that out. And actually, if you do, come to me and I'll ask my sales colleagues to give you a free trial of Bloomberg, okay? Because you're very savvy users. Now, look at this line and look at that. This is the 30-year bond yield, okay? First thing that I want to highlight is that you cannot take high yield for granted. In China, can you imagine with the GDP growth rate of 5%, the bond yield actually now is lower than Japan? Okay, I'm not an economist, okay, I don't have a PhD, but I think this really doesn't make sense to me. And this is actually happening to the 10-year the Treasury as well, right? We're very closing in. So, and let me just paint the picture a little bit more about the seriousness of this problem. Okay, it's not happening to Indonesia right now, but I think we're sitting here, managing insurance companies is a very long-term journey, right? So, first thing, think about China. We have $4 trillion in terms of investments, okay? And it's already like 50% above what Japan has. 50% above what Japan has. I like this chart because it always keeps us in check. How do we place different markets within the region? And if you look at this, the China insurance penetration, well, I use as a percentage of GDP, it's still very low compared to other markets like Japan, Taiwan, even US and UK. So this is the interesting thing. You have an industry that is so large, it's still underpenetrated, but then they have a low-yield environment. And God knows how long that's going to be, right? So the key message here is that you cannot take things for granted. Now, let's quickly go through what the China experience is right now, okay? So what do you do when you have a low-yield environment like that? Well, the insurance companies are very savvy, the regulators as well. So they're doing a couple of things. Obviously, they have to revise down the assumptions. Okay, they have to revise down the assumptions, investment return assumptions, risk discount rate, and all that. And then secondly, they have to pivot the product. So right now, the Chinese regulators is asking the insurance companies to write at least half of the new business in par. And well, it's going to take a long time because your in-force book is so big. Right now, the in-force is much less than that. But that sort of tells you the industry, the regulators, are actually preparing for a low-yield environment for the foreseeable future. Because we don't know how long this trade war is going to last. We don't know AI impact to the society could be very big, that inflation will not become a huge problem in the future. Okay. So you have all these other products that came up. None of these are new. Investment link, index, universal life, that's happening in Hong Kong. Then we have to think about the change in asset mix. So in China right now, what we know in the past is that the industry has worked towards lowering the bank deposits, increasing the share of bonds, and then the equities is probably one of the biggest change that will come in the next few years, okay, because of the proposition of par products. So what is the future? Okay. I thought we were going to have a full discussion on AI, but let me just give you my quick thoughts. I think AI-assisted investing is one of the interesting things, one of the interesting areas that we should focus on, because the market volatility is just so immense. If AI can even help us to get in front of some gray swan, black swan, whatever swan event that will happen, maybe a couple of weeks, a couple of days earlier, that can already save the industry some huge amount of capital. Regulation flexibility is another one, okay? I know there's a lot of dialogue going on, but I think the regulators and the industry pretty much have to work on a day-to-day basis in terms of figuring out, right? And probably the AI situation can help bridge the gap a little bit. Okay, let me just see. Okay. So second problem. This is me a year ago, okay, at another conference learning about insurance. You know what I'm going to show you next, right? Okay. So I'm turning 45 next week. I'm freaking out, not just speaking here. I'm freaking out because I have a 13-year-old, I have an 11-year-old, and then I have a 7-year-old, right? All these education, living, getting married, it's unbelievable. So we all study the demographics, but let's just take a step back and recalibrate this a little bit. Now, okay, unfortunately, I stole this chart from McKinsey, from friends in McKinsey. Probably there's some friends in here from McKinsey. Pardon me, I should give you a heads up earlier. But the aging population, okay, in Asia, it's still not too bad. Well, optically, China is 20%, 65% above, right? And then we're talking about the highest, the oldest, definitely will be hands down Japan. 32% of the population will be 65 and above. Now, okay, then what would the society do? One of the tricks for governments and regulators, of course, is, well, you gotta lengthen the retirement age. Well, let's take a look at the retirement age. This is the only time that is actually good to be at the bottom of the list. Indonesia. Be proud of yourself. Your retirement age is one of the lowest in the world, okay? Now, on the right-hand side, now you're at the top, okay? Now you're at the top, okay. So the red ones, just for your reference, are Asian countries, and then the blue ones are Europeans, and then the North Americans, okay? So yes, by far, in Asia, we still have the lowest retirement age. But again, we can't take that for granted. At some point, the retirement age will be lengthened. So it could be an opportunity, it could be a challenge. I suppose it is a great opportunity for insurance companies because the payment period has lengthened, right? So depending on what product you're selling, of course. Now, so this is some case study that we've done. I'm gonna share with you from the China experience. So in China, we have been doing a lot of these long-term care insurance since 2016, okay? Since 2016. Now, fast forward to now, it's already about, give or take, 8 or 9% penetrated. And this is just gonna keep going. One of the largest life insurer in China, China Life, have built 30 senior communities around the country. And just in the past, less than a decade, they're propping this property up, okay? In Japan, we have one of the largest P&C insurance companies actually bought a nursing care home facility, and it's contributing, I think if I'm not mistaken, about $1 billion in terms of revenue, $1 billion USD. And I think the margin is decent, it's the high single digit. Now, I'm going to test you guys a little bit. I stole this from, I didn't steal it. We actually purchased the data from AHAI. And this is very familiar to you. This is the breakdown by APE. Now, the reason why I want to show you this is because one of the interesting things that I find is that in this market, your contribution of direct marketing is quite big, which is I do not see anywhere else in this region, at least not China, Taiwan, Korea. Okay, so what's going to happen in the future, right? It's about two AI talking to each other, right? So I think what we need to reimagine in the future is that the shopping around experience start with AI, okay? So as a distributor, you need to think about getting in front of that. So it's not just on Google anymore. It's about, can you convince the AI agent to promote or present your product? That's one game changer that deserves us to think about. Okay. So how are we doing with time? Okay. Now we're sort of in the middle of the presentation, so let me just go through this really quick. So we surveyed, this research just came out this morning. We did this just for this conference. Actually, yeah, I was so lucky that we got a survey back. And it's a very busy chart, but let me tell you the interesting thing that we found from this survey. So if you ask the insurance companies, what is the percentage increase of your tech spending for the next 12 months? In Asia, 25% would say we're going to keep the same. And about half would say we're going to increase about 5% or so. And only 22% would say, okay, we'll give it a little bit more, 5% and above. But look at your friends in Europe, US. They're spending at least 1/3, right? They're going to increase by more than 10%. 1/3 of them would say, we're going to get at least increase by 10%. Okay, then where within the tech you're spending? Okay, this chart is another interesting one. We thought when we sent it out, a lot of people would just say, hey, we're going to put a lot on Gen AI, we're going to put a lot on AI. Guess what? In Asia, no, that is not the case. That is not the only 6%. They allocate 6% in Gen AI, 11% in AI. Compared to the Europeans and the US, they're doing at least 30% and above in Gen AI. Now, obviously, I wish the survey can tell us fill out the survey, but we never know. But my guess is that probably it's a function of supply and demand. And I'll elaborate that a little. Why is that the case? Now, interestingly, in Asia, now this is the only thing that is consistent across different regions. Okay, so we got 65% of the spending in legacy system. We're still trapped to service the legacy. Only 35% in new tech. And if I show the chart to Europeans and US, roughly the same. They're like 6-4 split, something like that. Okay? This is the distribution of between legacy. So I think in Asia, when we send out the survey, you cannot rule that there will be some developing countries, not all developed. So perhaps compared to the Europeans and the US, it's the access to the technology. You have access to the hardware and the software and the talents. And of course, Gen AI and AR are very expensive things, right? So obviously, one project here is less expensive than the other. We hope we will come back to that one later on during the Q&A. Now, this is a very busy chart, but I want to show you that right now we already see some results from AI or tech spending in general. So if you hone into a couple of the big companies, East Asia, like Ping An and AIA, okay, you will find that there's a lot of use cases, obviously the sort of the easier entry area, like claims, writing, right? So AI can probably help Ping An to avoid paying 500 billion yuan in terms of credit insurance. Same thing's happening in Japan. So all the three P&C players are actually setting pretty hard targets in terms of the expense cuts. Okay? So the Japanese are thinking about 30% expense ratio. 30% expense ratio is their medium-term target right now. Not a whole lot of improvement. It's just another 1% or 2 percentage points improvement. But still, there's only 3 big Japanese insurers there. Right? So it's very meaningful. Now, let's give you a little case study in Ping An. So you probably heard about this company, but let me just remind you the size of what they're doing. So we're talking about market cap of 125 billion US dollars, okay? EV of 1.4 trillion, okay? Dollar. And then the EV CAGR growing at 12%. And then they have a lot of insurance banks, but these are some of the good doctor, the One Connect, the hospital, the auto home, Lufex. These are all non-insurance directly related, but they're building the ecosystem. 10 years ago, they hired a senior executive from McKinsey to be their co-CEO. Well, she left already, but she definitely left a legacy there. So kudos to Jessica. And then the next big thing for them, just to echo back, is the health senior care ecosystem. Okay, so one of the interesting things that they're doing is that, remember I showed you the chart about China Life having 30 different cities, homes? So they're also doing something similar, but they're attacking the premium client. So they're giving them these fancy apartments if you buy a policy with a certain amount of premiums, very high. We're talking about probably 1 million yuan and above. Okay? So I've actually went to one of the showcases before. It's the home is quite fantastic. Like literally, if a person slipped in the home, an alarm will be triggered, and then some people will come within 2 minutes. Okay. So, and in China, of course, you know the aging population, one-child policy. There's probably one child for only 4 seniors. Okay. Yeah, the seniors are going to spend a lot of time looking after themselves. Yong'an is a pure online insurance company, and imagine just doing online can give them almost 5 billion US dollars in GWPs. And they started from doing what? They started from doing online shopping, shipping, return, insurance. Ticket size is 1 yuan or even less than that. And it's so billions of them. Okay? And of course, that is the blue part, the digital life. And over the years, and then they went into healthcare, went into auto. This is probably, okay, unless you classify health insurance part of GI, you never see a GI with auto percentage that small. Yet they pull this off. They can be a significant general insurers without touching auto too much. They collaborate with Ping An. And then the next step for them is definitely exporting the technology revenue. So they're already up to about 1 billion, I think a little bit over 150 billion US dollars in terms of just selling technology, SaaS model, service technology model. And look at the, I think, I'm sure some of you, your group offices, their clients, AIA, Generali, Prudential, Zurich, right? Mainland, there's a lot of big names there. So yeah, they all need the technology. And the interesting about this firm is that because they have established the presence, the reputation of understanding the insurance, and they're not just servicing insurance, they're servicing, I think, yes, you can see that Grab, Halo, PayPay as well, right? These companies are all cross-pollinating each other, tech companies. So for the P&C part. Now, I just want to share with you 3 quick points, okay? Electric vehicles. I've been in Bali for the last 2-3 days. I haven't seen one single electric vehicle yet. I see a couple of EV stations, but in China, they're everywhere. They're everywhere. Okay, and you're thinking, what will impact the insurance industry? You probably heard about the claims, and let me show you this. This is the auto insurance loss ratio in China, okay? Now, there's a lot of volatility, and because they've adopted IFRS 17, so the history is not comparable anymore. But if you look at what happened in the last 2 years, okay, now the loss ratio is about 70%. Okay? Before in China, it's always less than 70%. Okay? You have some COVID volatility up and down. But this is dramatic. And you're talking about the top, basically the top 2 players in the market. So what happened? Very quickly, when the EV adoption increased, number 1, accident frequency. Number 2, the repairman costing, because you have a lack of sort of supply chain. They're still building through. The batteries, the sensors, everything is much more expensive. And we're seeing the same thing in Japan. Now, Japan is interesting. Japan's pain is not because of EVs. Their pain is because of simple inflation, claims inflation. All-time high right now. Again, over 70% in terms of auto loss ratio. And the claims inflation is, I think, growing at a pace of high single digit per year. Okay, that's another pain point that they need to figure out. And of course, we are going to switch the model, right? Later on, we have autonomous driving. When I started working at Bloomberg in 2014, we were already talking about autonomous driving. I think level 1, level 2, or level 3. Back then, we thought we should all be in autonomous driving vehicle right now in 2025, but guess what? Okay. But now with AI, that's probably possible with 5G and all that. So we all know that the model is going to change. It's not going to go from drivers anymore. It will be more manufacturers. And then the impact of NatCat. I think one of the opening remarks talked about inclusiveness, right, which is very important in this part of the world for the. But let me just sort of outline this a little bit more. We borrowed the data from Aon Benfield, and you can see that by far with the box, right, you can see that the Asian NatCat always have lower insured coverage compared to the US. It's still very large after all these of improvement. Okay, and yes, we also talk about frequency and severity, right? This is a chart for China. So what I want to point you is about the super typhoon. We all remember Yagi. That's what happened last year. And this is just to show that, we're really getting basically one super typhoon every year in this region, which was not like that a couple of decades ago. Okay. So what's the future, right? Well, Zhong'an's success to simplify the product. Lessons learned number 1. Modular, customer-driven offerings. They can come up with new products like within weeks. That's how they can be successful. Okay, take a step back. They're not making huge money yet because they have to pay a lot of channel fees to the online platforms. But At some point, when they reach the scale, they have already successfully achieved underwriting margin, okay? And it just so happens that the investment environment in China wasn't so great. That's why they're not making a lot of investment return at the moment. But when the cycle turns, then the business will pick off. So I think in terms of time, that's pretty much it. Yeah, I still have another 30 slides to show you, but I think I'll take a little break and let Hasina to do the moderating. Thank you so much. Thank you so much for your attention.
Thank you.
Thank you.
Yes, thank you, Steven, for the presentation. I think we found so many actually new data, and not so new, but this is actually some new information also for me in some of the countries. But before actually I go to audience for Q&A, maybe can you actually explain more on what is going on in Taiwan? I guess that there is some peak of numbers actually, even exceed China.
Right. Actually, I did prepare a little bit of slides on Taiwan. Thanks for the question. If we can move the slides back to my deck while I'm talking, that would be great. So in Taiwan, the problem is this. You all heard about the sharp appreciation in the Taiwan dollar. The currency appreciated 6% in a matter of 2 days. It really caught the attention of the whole global investment market, period. Everybody's asking about why. Everybody's blaming the lack of regulation or self-discipline of the industry. Now, I want to defend the industry a little bit. Kind of like, okay, this is not a perfect comparison, but I will go back to that. In Taiwan, the problem is that the domestic investment market is not big. Okay. Yet, the insurance companies are sitting on $1 trillion of AUM. So they always have to look abroad. Right? And when you look abroad, you cannot stay away from the US. So that's why a lot of they have a sizable currency mismatch, if I'm not mistaken, with their liability. Take a step back. They also sold US dollar policies, just like what's happening in Indonesia. But there's still a lot of Taiwan dollar-based currency policies. They're investing their money in non-Taiwan dollar assets. Okay. But the thing is, they have built some system in place. Okay. I think what shocked the insurance company is that they didn't expect the US dollar it's not actually the Taiwan dollar strengthened, US dollar weakened. They didn't expect that. If you ask most of the insurance company region, the Japanese think that yen is stay weak. Taiwanese think they stay weak. Everybody would think, maybe except a few countries, islands. So with that in mind, yes, some of them sort of went ahead of themselves a little bit in terms of the unhedged, but they have some other protocols in place. They have FX volatility reserves, okay? And actually, well, as an insurance company, you don't just buy bonds, right? You also buy equities. So it happens that the Taiwanese insurers are also in quite a bit of the Taiwanese equities, global equities. So when the Taiwan dollar strengthened, the Taiwan stock market also improved. So it's not a loss-loss situation. So there's some mitigation effect.
Thanks. Thank you for the explanation, Steven. So let me actually go back to the audience and then invite you to ask questions or thoughts for us to have a discussion with. Can someone actually help me on passing the mic to who is going to be the first? Oke, Pak.
Baik, terima kasih. Bu Hasina, saya pakai bahasa Indonesia ya?
Boleh.
Boleh, baik. Tadi sudah disampaikan bahwa penggunaan AI itu memang banyak manfaatnya gitu ya. Nah, tapi tentunya selain manfaat ada juga yang namanya risiko penggunaan AI. Saya ingin minta dielaborasi penggunaan AI untuk perusahaan asuransi Risiko-risikonya itu apa saja dan bagaimana untuk mengatasi risiko penggunaan AI tersebut. Terima kasih.
Okay, maybe, yeah.
The translation on. I didn't have the translation.
Oh, you don't have the translation. Okay, maybe I can just translate the questions. The question is, actually everybody now is encouraged to use AI, right? But other than the benefit of using AI, what is actually the risk that is coming from AI and how to mitigate, and also what actually, can you actually explain on what kind of risks that we are facing through AI? What are the risks?
Thank you for the question. Terima kasih. I think this is a very topical discussion right now that's happening in the AI world. Obviously, if I were going to do my presentation on AI, I would definitely have like 20 slides on deepfakes and 50 slides on like hallucination and things like that. So these are not something that is new to people. But I think one personal experience I'm going to share with you. So obviously, I told you right in the beginning that this presentation is very important. You know, I don't want to mess it up, so I try AI a little bit. And when I use AI, the AI told me that, oh, I prepare a PowerPoint for you. I'm going to email it to you. But guess what? I checked the email like 6 times. None came through. The AI thought it sent an email to me. Okay. So yeah, I think one of the interesting things is that AI, you can still treat AI like a person. The AI can make mistakes. The AI can do a lot of things at the same time, but they may be able to make a lot of mistakes at the same time too. So that's why in the next 5, 10 years, humans are still going to be okay for a while, my perspective. But for the insurance industry, just to your point, I think one of the things that I'm hearing around is that the cybersecurity, I think that's a very important topic right now. And to the insurance industry, yes, your risk management team, your compliance, day-to-day basis, they're looking at this, right? But I think on the business opportunity angle, that's another big area that at least I'm interested in, is the opportunity of cybersecurity premiums. If I'm not mistaken, I think it's still in the single-digit billion globally, but it's growing at a very fast pace. Yeah. Sorry, do we need translation for this, or he has the...
Yeah, I can translate it. I think probably is, yeah. Do you need the translation, Pak? No, thank you.
Thank you, thank you.
Thank you, Pak. Any other questions or thoughts from the floor before I go to Slido? Or Slido? Yes? Can we actually use Slido and we will go through the questions? Oh, this is actually the questions. You can see,
okay.
Yeah, the question is actually already up. 35% increase in tax spending for developed countries, such as US. Is it only for automation or AI? Or is it combined with hardware, infrastructure, and security?
Yes, very good question. I have my cheat sheet here. Let me just double check before I gave the wrong answer. So it is definitely not just AI, and I think it also includes things like cloud computing, investment management process, risk and compliance. One of the interesting things that we observe is that when you ask the destination of those investments, right, AI is one of them. But think about what is actually the lowest, right? Turns out customer service is the lowest. Yeah, it's very interesting. Customer service is lowest, single digit of the allocation. If I'm not mistaken, I think regulation is somewhere like mid-low. So this is probably another point to think about, right? Well, if the others are not prioritizing customer service, maybe I can compete better with doing that. We have food for thought here. Hope that helps.
Okay, thank you, Stephen. And we have another questions coming from the floor. Given all the challenges mentioned, what is one new aspect of reinventing insurance that we should include in our strategy? And actually, this is quite good. Yeah.
Wow, okay. This is even a tougher one than doing this presentation, I have to say. I think over all these years, the way I would think about this is this. So the biggest tectonic shift in the investment strategy, in the insurance strategy from a developed market is Japan. So in Japan, they have done a lot of M&A over the past 10 years. Basically non-stop, especially both P&C and the life insurance. Now, I think that's a good start, right? That's a very good start. How to integrate them. Not every deal turns out to be very favorable. Some has some tough times, like somebody bought insurance companies, maybe the combined ratio increased because of Ukraine war, Russia, and all that. But that's okay. That's just bad timing. But I think the key point here is to think about when you try to do something new, decision of do you want to breed it in-house or you want to acquire it. I think that's a constant discussion to be had. And I think as an insurer, personally, I would love to see more in-house, if you ask me. Maybe it's a lot more costly. But honestly, doing M&A is very expensive too. Very expensive. So I would prefer doing something in-house. Now, I'm not a tech guy, so specifically what area I cannot tell you. But I think from a top-down strategy-wise, because guess what? The most important thing is that mindset has to come all the way up top and then disseminate down. And then if you build something in-house, you can actually talk to them more freely, I think. It's that amount of discussion that can change things, right? And I think, if I'm not mistaken, that's what Ping An did well. That's what Ping An did well. Gosh, if you work for Ping An, yeah, you probably cannot sleep at night. Yeah, it's a lot of internal competition. Every business unit is trying to fight for that resources to compete, and they try to be extremely efficient. I hope that helps a little bit.
Okay, another question is actually, is the lower technology spending by Asian firms due to adapting existing innovations instead of creating new ones? What are the long-term risks or benefits?
So, yeah, I'm still trying to figure that out. Like I said in the beginning, probably access to technology is one thing, okay? And obviously, I think everything has to be relative in scale. I'm pretty sure, like, I'm not trying to dumb it down, but if you hire data scientists in Asia, the money is probably a bit less than you would have to spend in the US or in Europe, okay? Maybe our tech requirement doesn't have to be as advanced or as stringent, but I think, yes, you're right. One of the key pain point, I think, is I won't say over-focus on legacy system, but is there something that we can should we spend the money on legacy system to just get rid of the legacy system? I think that is the biggest place to think about, yeah.
Yeah. Okay, so I think since you are talking about new investment or changing the whole system or actually change a bit, it's actually require a lot of fund, right, capital. And again, it's also the questions of how to make it to maximize those investment and what is the benefit to make sure that we're actually getting the benefit as soon as possible because it requires a lot of capitals. How do you see that?
Yeah, I think the concept of seeing something quick, to monetize something quick, is if I, it's a little bit old school. Like in this new day and age, all these investments probably you won't see a return until, I don't know, 5 years down the line. That's my guess. If you talk to most of the tech analysts out there, I sit with one on AI, he or she will tell you that to monetize AI, nobody is doing that right now. Everybody's just like getting into the zone. Because guess what? I mean, you don't need to look too far. Just look at the phones and computer gadgets, right? You build something this year, this model, next year there's a new version coming out. If not 6 months, that is the problem. That's the problem. It's a chasing game. So, but I think the investors, based on my understanding, and the consumer as well, would like to stick with a company that has the ability and the mindset to keep moving forward. I think that is important.
That's one of the biggest benefits then, yeah.
Yeah.
Okay. Yeah, okay. Please have a seat. And I think since we are running out of time, I guess let us actually have a closing, right? Okay. Well, from this discussion, I hope, well, actually, personally, I have a lot of new information for me, but I hope that the audience is also having the same thing. And I think what I can recap from our discussion and your presentation is there are a couple of points, which is I think Asia insurer actually facing a mounting pressure from climate risk, inflation, demographic shift, and balancing long-term resilience with short-term performance is now a strategic concern. I think it has been stating by the previous speakers. And insurers actually are diversifying its product, exploring infrastructure, sustainable asset, and alternative investment, but at the same time, also stay agile, facing the volatile markets. And advanced analytical and real-time data are helping insurer optimize capital allocation and risk modeling, making data just not a tech enabler, but an investment differentiation, and actually what you actually explained in the last comment. Lastly, actually, lessons learned from other countries should become a consideration for Indonesia when we want to do a transformation to have a sustainable growth. Thank you, Mr. Steven, for delivering the presentation.
Thank you, Hasina. Thank you, everybody. Thank you. Thank you for the time.